The global financial system may be approaching one of the biggest turning points in modern economic history. And according to many investors, analysts, and market watchers, following developments across banking, crypto, and international finance right now, growing instability inside traditional financial systems is creating a serious conversation about whether digital assets like XRP could eventually challenge parts of the old monetary infrastructure dominated for decades by the US dollar and legacy banking networks. Now, before social media transforms this discussion into another unrealistic XRP replaces the dollar tomorrow narrative, it is extremely important to separate speculation from confirmed reality because financial systems do not collapse overnight and global reserve currencies do not disappear instantly. The US dollar remains the dominant reserve currency in the world today. It continues playing a central role in global trade, international banking, debt markets, commodity pricing, energy settlements, and worldwide liquidity systems. Most major economies still depend heavily on dollar-based financial infrastructure for international commerce and financial stability. That reality is not changing tomorrow morning. However, what is changing is the amount of pressure building underneath the traditional financial system itself. Banking instability, rising sovereign debt, inflation concerns, weakening confidence in institutions, payment inefficiencies, geopolitical tensions, and rapid technological transformation are all forcing governments, banks, corporations, and investors to rethink what the future of money, payments, and financial infrastructure may eventually look like over the next decade. And that is exactly why XRP continues appearing in these conversations again and again, whenever discussions surrounding financial modernization, banking instability, and digital finance begin dominating headlines. Supporters of Ripple believe the company strategically positioned itself years ahead of this transition by focusing specifically on cross-border payments, liquidity optimization, and institutional financial infrastructure rather than relying entirely on retail speculation and internet hype cycles. Ripple consistently promoted the idea that blockchain technology could improve how value moves globally by reducing settlement times, lowering operational costs, increasing transaction speed, and freeing liquidity currently trapped inside fragmented banking systems spread across different regions and jurisdictions. This matters because one of the biggest weaknesses inside the traditional financial system today is inefficiency. Even in the modern digital age, international financial transfers still rely heavily on outdated infrastructure built decades ago. Cross-border transactions often move through several intermediary banks before final settlement occurs. Payments may take multiple business days to complete. Currency conversion processes introduce additional costs and friction, and institutions frequently need to maintain large amounts of idle capital inside pre-funded accounts across multiple countries just to ensure liquidity availability. These inefficiencies become extremely expensive for businesses and financial institutions operating globally. Ripple's long-term argument has always been relatively straightforward. Financial systems designed decades ago cannot efficiently support the speed and demands of the modern digital economy forever. Eventually, modernization becomes necessary. And according to XRP supporters, blockchain-based liquidity systems could become part of that modernization process. Now, why are banking collapse fears becoming increasingly connected to XRP discussions? Because confidence inside traditional banking systems has become more fragile over recent years. Several banking crises already reminded investors that even large financial institutions remain vulnerable to liquidity pressure, rising interest rates, unrealized losses, and sudden depositor panic. When banks begin showing signs of instability, people naturally start questioning whether the financial system is truly as stable as it appears on the surface. This does not automatically mean crypto replaces banks, but it absolutely increases interest in alternative financial infrastructure. Trust is one of the core foundations supporting modern financial systems. When confidence weakens, investors begin searching for systems that appear faster, more transparent, more resilient, and more efficient under stress conditions. This is part of the reason blockchain technology continues attracting institutional attention despite crypto market volatility and regulatory uncertainty. Another major issue influencing this conversation is the explosion of global debt. Debt levels across governments, corporations, and financial institutions worldwide have expanded dramatically over the past decade. Governments continue borrowing heavily. Interest payments are increasing rapidly, Economic growth remains uncertain across several major economies, and central banks face enormous pressure trying to balance inflation control with economic stability. If interest rates remain elevated too long, economic activity may slow significantly. If rates fall too quickly, inflation risks may return aggressively. This creates a highly unstable balancing act for policymakers. Whenever financial systems experience pressure, liquidity becomes one of the most important factors determining stability. Who controls liquidity? How efficiently can value move globally? Which systems operate best during stress conditions? These questions become extremely important during periods of economic uncertainty. Ripple supporters believe XRP could potentially become valuable in such an environment because Ripple focused specifically on liquidity efficiency and cross-border settlement infrastructure long before most institutions seriously discussed blockchain adoption. Instead of relying on slow intermediary banking systems and expensive pre-funded accounts, Ripple promoted the concept of digital liquidity systems capable of settling transactions faster and more efficiently across borders. Again, it is extremely important to emphasize that this remains a future possibility rather than confirmed global adoption. However, institutional conversations surrounding blockchain infrastructure are becoming increasingly serious every year. Banks are researching tokenization aggressively. Governments are exploring digital currencies. Payment providers are modernizing settlement systems. Asset managers are investing into blockchain development. And regulators are actively debating crypto legislation and stablecoin frameworks. This transition toward digital finance continues advancing regardless of short-term crypto price volatility. One reason XRP continues standing out inside these discussions is Ripple's institutional-first strategy. Many crypto projects focus heavily on internet culture, meme-driven speculation, and decentralized narratives aimed primarily at retail traders. Ripple focus on enterprise partnerships, financial infrastructure, regulatory engagement, and payment providers. That institutional positioning continues, fueling speculation whenever conversations surrounding the future of banking intensify. Another major trend influencing markets right now is tokenization. Tokenization refers to digitally representing real-world assets on blockchain systems. These assets could eventually include currencies, government bonds, equities, commodities, real estate, and other financial instruments. Many institutional analysts believe tokenization could eventually transform global finance by increasing transparency, improving settlement speed, reducing operational friction, and enabling programmable financial systems. If tokenization expands significantly, systems capable of moving liquidity efficiently between different digital ecosystems could become increasingly important. Ripple supporters believe XRP may potentially help facilitate interoperability between these future systems. Again, nothing is guaranteed. Competition across digital finance is becoming extremely intense. Stablecoins are growing rapidly. Central bank digital currencies are under development globally. Banks are experimenting with private blockchain infrastructure. Technology companies are aggressively entering financial markets. And governments remain cautious regarding regulation and financial control. Critics also continue raising important concerns regarding XRP and crypto markets overall. Some analysts argue governments and central banks will ultimately maintain strict control over financial infrastructure rather than allowing public blockchain assets to become core settlement systems. Others believe stablecoins tied directly to fiat currencies may dominate digital payments instead of assets like XRP. Some critics remain skeptical regarding whether blockchain systems can truly scale globally while satisfying security, compliance, and regulatory requirements across multiple jurisdictions simultaneously. These concerns absolutely deserve serious consideration. No outcome is guaranteed, but one thing is becoming increasingly difficult for markets to ignore. The global financial system is entering a period of enormous technological and structural transformation. At the exact same time, confidence in traditional institutions appears increasingly fragile. Historically, moments like this often create massive changes across markets and industries. New technologies emerge. Old systems evolve under pressure. Financial infrastructure modernizes. And entirely new economic opportunities can develop during periods of uncertainty. This is exactly why many XRP investors believe the next decade could become one of the most important transitional periods in financial history. They are not simply watching crypto price charts. They are watching banking stability, debt markets, liquidity systems, tokenization trends, payment modernization, central bank policy, institutional blockchain adoption, and the evolving structure of global finance itself. Because many believe the long-term value of XRP depends far less on short-term speculation and far more on whether the world gradually transitions toward faster, blockchain-integrated financial infrastructure capable of supporting a modern digital economy. Still, caution remains extremely important. Financial crises create uncertainty, volatility, and unpredictability. Markets can react irrationally. Liquidity conditions can tighten suddenly. Fear can spread rapidly. And speculative assets can experience major swings in both directions during periods of instability. No one should assume any investment is guaranteed to succeed during economic disruption. However, one reality continues becoming increasingly clear. The traditional financial system is under growing pressure. Digital finance is expanding rapidly. Blockchain technology is entering serious institutional conversations. And XRP remains one of the most closely watched digital assets whenever discussions surrounding banking instability, liquidity modernization, payment infrastructure, tokenization, and the future evolution of global finance begin dominating headlines across the world. As concerns surrounding banking instability and financial system stress continue spreading across global markets, many investors are beginning to ask a much bigger question that goes far beyond ordinary crypto price predictions. What happens if confidence in traditional banking systems continues weakening while blockchain-based financial infrastructure keeps expanding at the same time? That question is becoming increasingly important because the global economy is currently entering one of the most uncertain transitional periods seen in decades. On one side, traditional financial systems remain dominant. On the other side, digital finance is evolving rapidly. And directly in the middle of this transition sits one of the most controversial discussions in the crypto market today: whether XRP and blockchain-based liquidity systems could eventually become part of the next generation of global financial infrastructure. Now, once again, it is extremely important to remain realistic. The US dollar is not disappearing overnight. Banks are not vanishing tomorrow. And governments are not suddenly handing control of global finance entirely to crypto markets. However, what is changing is a growing recognition that many parts of the traditional financial system are outdated, inefficient, expensive, and increasingly difficult to maintain under modern economic pressure. This is where XRP supporters believe Ripple positioned itself strategically years ahead of the curve. Ripple consistently focused on solving real-world institutional problems rather than only chasing speculative hype cycles. The company concentrated heavily on cross-border payments, liquidity movement, settlement efficiency, and enterprise-level financial infrastructure. Supporters argue that these areas may become increasingly important if the current financial system experiences deeper instability over the coming years. One of the biggest issues affecting global finance right now is the enormous amount of debt accumulated across governments and institutions worldwide. Debt levels continue rising at historic rates. Interest payments are increasing. Economic growth remains uncertain in multiple major economies. And central banks are trapped trying to manage inflation without causing deeper financial instability. This creates enormous pressure across banking systems. Why? Because banks rely heavily on stability, liquidity confidence, and predictable economic conditions to operate efficiently. When interest rates rise aggressively, liquidity conditions tighten. When liquidity tightens, weaker institutions become vulnerable. When institutions become vulnerable, market fear increases. And once fear spreads through financial systems, confidence can weaken extremely fast. History has shown this repeatedly. Bank runs can happen suddenly. Depositors can panic quickly. Credit markets can freeze. And governments often scramble to stabilize confidence before instability spreads further. Recent banking concerns already reminded investors that even modern financial systems remain highly vulnerable under stress conditions. Several financial institutions experienced major pressure in relatively short periods of time once liquidity fears started spreading through markets. This matters because confidence itself is one of the strongest forces supporting financial systems. Most people do not constantly think about whether banks are stable because they assume the system works. But once cracks begin appearing, investor psychology changes rapidly. People begin searching for alternatives. Institutions begin reevaluating infrastructure. Governments begin discussing modernization. And markets begin paying attention to technologies previously ignored. This is one reason blockchain technology continues attracting institutional interest despite volatility across crypto markets. Supporters argue blockchain-based systems can improve transparency, settlement speed, operational efficiency, and liquidity movement compared to many traditional systems currently dominating global finance. Ripple supporters specifically believe XRP could become increasingly relevant during periods when institutions aggressively search for faster and more efficient liquidity solutions. Ripple's long-term vision focused heavily on reducing friction inside cross-border payments. Today, international transactions often require multiple intermediary banks to complete settlement. Transactions may take several business days depending on jurisdictions involved. Liquidity frequently becomes trapped inside pre-funded accounts spread across different regions. These inefficiencies cost businesses and institutions billions of dollars annually. Ripple argued that blockchain technology could significantly improve this process by enabling faster settlement and more efficient liquidity access. Instead of maintaining massive pools of idle capital across multiple countries, institutions could potentially access liquidity dynamically using digital settlement systems. Again, this remains a future possibility rather than confirmed global implementation. But institutional conversations surrounding digital liquidity systems continue growing rapidly. Banks are researching tokenization infrastructure. Governments are exploring central bank digital currencies. Payment providers are modernizing settlement technology. Asset managers are investing heavily into blockchain development. And regulators are actively debating digital asset legislation. This broader transition toward digital finance continues advancing regardless of short-term crypto market volatility. Another major trend driving attention toward XRP is tokenization. Tokenization refers to digitally representing real-world assets on blockchain systems. This could eventually include currencies, stocks, bonds, commodities, real estate, and many other forms of financial value. Many institutional analysts believe tokenization could fundamentally transform financial markets over the next decade. Settlement speeds could improve dramatically. Operational costs could decrease. Liquidity movement could become more efficient. Financial systems could become increasingly automated and programmable. If tokenization expands significantly across global markets, systems capable of efficiently moving liquidity between different digital ecosystems may become increasingly valuable. Ripple supporters believe XRP could potentially help facilitate that interoperability. Critics, however, continue raising important concerns. Some analysts believe governments and central banks will ultimately prefer tightly controlled, centralized digital systems rather than relying on publicly traded blockchain assets. Others argue stablecoins tied directly to fiat currencies may dominate digital finance instead of XRP. Some critics remain skeptical regarding whether blockchain systems can truly scale globally while satisfying regulatory compliance and security requirements across multiple jurisdictions. These concerns absolutely deserve serious consideration. No outcome is guaranteed. Competition across digital finance is becoming extremely intense. Banks are developing private blockchain systems. Technology companies are entering payment infrastructure markets aggressively. Stablecoin adoption continues growing. Central bank digital currency research is accelerating globally, and governments remain cautious regarding financial sovereignty and monetary control. Still, XRP remains one of the most discussed digital assets whenever conversations surrounding payment modernization and banking instability intensify. Why? Because Ripple focused on institutional infrastructure years before most of the financial world seriously discussed blockchain integration. The company consistently emphasized enterprise utility, cross-border settlement efficiency, and regulatory engagement. That positioning continues fueling speculation whenever confidence in traditional financial systems weakens. Another important issue influencing markets right now is the changing nature of money itself. For decades, financial systems operated through relatively centralized infrastructure controlled by governments, banks, and major institutions. But digital technology is gradually changing how value moves globally. Consumers increasingly expect instant transactions. Businesses require faster settlement systems. Global commerce operates continuously across time zones. And younger generations are becoming increasingly comfortable with digital financial ecosystems. This creates enormous pressure for modernization. Traditional financial systems built decades ago struggle adapting to the speed and flexibility demanded by the modern digital economy. This does not mean old systems disappear entirely, but it does mean transformation becomes increasingly likely over time. Some XRP supporters believe the next decade may represent one of the most important periods of financial transition in modern history. They believe banking instability, rising debt pressure, technological advancement, and payment modernization efforts are all converging simultaneously. And historically, periods where economic stress overlaps with technological transformation often create major shifts across industries and financial systems. Still, investors should remain cautious and realistic. Financial crises are unpredictable. Markets can behave irrationally during periods of panic. Liquidity conditions can tighten rapidly. Fear can spread aggressively across institutions and asset classes. And speculative assets can experience massive volatility in both directions. No one should assume any digital asset automatically becomes successful because traditional systems experience stress. However, one reality continues becoming increasingly difficult for markets to ignore. The traditional financial system is under pressure. Digital finance is expanding rapidly. Institutional blockchain adoption continues growing. And XRP remains one of the most closely watched digital assets whenever discussions surrounding banking instability, payment modernization, liquidity systems, tokenization, and the future structure of global finance begin dominating headlines across the world.